Barrick Gold is the world's largest gold miner with development projects in the U.S., Canada, South America, and Africa. And Peter Munk, the company's chairman, is in Toronto, at the Canada Economic Summit, where Adam Johnson is as well. And Adam is sitting down with him. Adam, take it away.
Hey, thanks, Matt. Mr. Munk, great to have you here. Thanks. You, about 2.5 years ago, took off all the hedges at Barrick Gold. It cost about $5 million. Did you think you'd make it back this fast?
You mean $5 billion?
$5 billion.
Well, things have turned out well. Gold is doing well, and Barrick is doing well, being the biggest gold producer.
The question, though, you look at the performance this year of Barrick versus gold. Barrick is down about 10%. Gold is up 6.5%, 7%. How do you get excited, or how do you get people, investors, excited about buying the stock instead of the bullion?
Because I don't believe that our investors really look at day by day or quarter by quarter. If you take a period of time, we continuously outperform gold, but it doesn't mean that week by week or day by day. There could be a strike in one of our mines, something could happen, or we could come up with a major discovery, so it totally distorts the picture. We are a long-term gold investment, and our gold traders look for that day's profit or that week's profit. So it's a different kind of investment media. They don't correlate immediately. They correlate over the long term, and hopefully gold shares outperform gold, otherwise there'd be no justification for gold shares.
All right, so how are you growing the earnings? How are you doing it?
Well, by increasing our margin. If gold goes up $100, you have to say, I invested $1,500, so I made $100 in my $1,500.
In other words, you manage your costs, so it becomes
multiplied. It's a leveraged investment because our cost remains the same. When you buy gold at $1,500 or $1,600, you pay more for the gold. So your additional profit is related to that. Our production costs are fixed. So our $100 goes directly down to the bottom line. So it adds to our margin. And also, we have huge gold reserves, so we can always increase our production base as well.
Now, you said it's getting hard to go out and buy other gold mines. They're getting too expensive.
They're getting too expensive.
So what do you do?
Develop our reserves. That's why reserves are so important, and no one has a larger reserve base than Barrick. That's what we do.
And you're also buying copper mines.
Because it generates cash immediately, and we need free cash to develop this enormous, we have 150 million ounces of gold in the ground, not yet producing revenue. Each and every mine costs $2 to $3 or $4 billion. So we need an enormous, right now, in our 3 new projects, we have $11 billion committed. So we need new cash flow all the time to develop quicker and faster our in-ground reserves.
You made the announcement for the copper mine that you're buying now, second largest acquisition you've ever done. Might you buy another?
I don't think that's on the cards right now. I think more what is on the cards now, the announcement of developing new mines from our reserve base we have. That is really the key to Barrick and to all major gold companies, that they have an accumulation of future gold production in their reserve base.
Peter Munk, thank you for joining us.